Hello and welcome to Currency Point, presented by me, Evan Lucas, for FP Markets. As always, please have a very good read through of the disclaimer on screen. Everything in this video is general in nature, none of it should be relied upon as any form of advice. FP Markets does not know your personal scenario nor your personal financial goals, and therefore none of it should be relied upon as any form of advice at all. It's just general in nature only. We are getting push-pull, something we haven't actually seen in the post-pandemic world, and that's between real data and Fed speak. It's good to have it back from my point of view because it's created some volatility, which is nice to see in terms of what movements happening inside currencies. Actually gives you a little bit more of excitement to go on with what you're doing with your trading. So it is interesting to see it back, and it is very much on two different sub-cycles in terms of where we sit. Need to highlight very clearly the US CPI data from last week. It was incredibly strong. There's no other word to use it, particularly the core figure of 3% year on year, so a 0.9% month on month jump. That is the largest jump we've seen since 1981. And that core figure is now a full 1% above the Fed's target rate of 2%. We'll come to that in a minute. Also need to look at headline. At 4.2% year on year, that's the highest headline read we've seen in the post-GFC world, not COVID world, GFC world in terms of where we sit. That's the kind of level of inflation that Bernanke was hoping for and never got. So just be aware, this is quite a read that we got for April. Now, clearly there will be arguments about the transitory nature of that, and that's where Fed speak came in. I'm going to come back to what happened with CPI in a minute, but we need to get to Fed speak and very clearly look at what the Fed did last week and also to start this week to really keep the data at bay from what they're trying to do. Richard Carita has to be front and center along with Lael Brainard. Those two are the biggest players in my view from speaking last week, probably just outside of listening to Jay Powell in terms of where you sit. Both of them held the company line. Now, Brainard spoke before the CPI data. She believes that inflation is transitory. She thinks growth is reasonably good. However, they are mindful that COVID's in the way, and she actually pointed very clearly to what happened in the April numbers for non-farm payrolls and showed that there's still a long way to go. She's been backed up by some other Fed members that you need to look at in with regards to my writing, and they also clearly say that until you start to see a consistent, steady, structural movement in employment, that's why they believe that the inflation figure is transitory, and that an April figure repeated in May, June, or even in July would very much back up their thesis that this isn't going to be the case. Carita then, he was the one to watch when he came out after the CPI data and very much backed up the Fed's idea that they expect inflation to run a little bit hot very, very soon, but they're not concerned about it. He was clearly very, very strong on this idea that they could even run as hard as that to 2022. Some are even saying that it could run as hard as it needs to till 2023. I think that's an incredible sort of discussion to have. And Christopher Wright was the one to really listen to there. He was very, very strong on that idea that what they're saying, it might not even have to be 52 weeks of inflation being actual and therefore above 2% to move rates. So the interesting fallout from all that Fed speak is that the push-pull factor in the dollar was huge, and probably to argue that maybe, just maybe, the Fed speak won out at the end of the week and to start this week. So need to look at euro dollar because that at the moment is all over the place. Moved up 1.5 cents, not percent, cents inside that CPI data to the top of the band that I've been concentrating on in this quarter, which is 121.5. Touched it again, didn't get through it. And then once Carita spoke, it dropped all the way back to 120. It's hovering around that mark. It's sort of holding in between and below 120.5, which is interesting to see. But if the Fed keeps talking like this and pushing things around, that is going to be very interesting to see in terms of how they do that. You then also have to look at what happened inside the pound. The pound absolutely exploded with what happened off that news, broke through 139 and went to a 2-year high of 141.7. Eased all the way back to 140 in the post of the CPI print. Same with the Aussie dollar, smashed through 77 cents, went all the way up to 78 and almost to 78.9. In terms of where it sits, it's dropped back to the low end, or to the upper ends of 77.5 to the low end of 78 cents. It's all very interesting. This is all very negative US dollar, which is what the Fed wants, and that's all well and good. But you can tell that it's really starting to get that question of where that equilibrium point is. And the US dollar, from my perspective, is creating quite a lot of interesting trades, and it is mixed. I will highlight that very clearly in terms of where it sits. Euro dollar is the one I'm watching quite closely because I personally think the dollar there has got some strength to play out, and I also think what's going on inside cable at the moment is another interesting one because that's a pound story.